Well, good evening, everyone, and welcome to this market outlook this 3rd of October 22. And yes, it's been a few weeks. It's been hard to do an update as of late. Anyway, we'll start here with on the 10-year yield. You can see bonds has just smashed through all these levels I've had marked in. So it's time I'm removing them. Broke the previous high. We look at the weekly and see we came up to the 5th of April 2010 high and broke that with this wick. Possible pullback before continuing, or will we have a deeper pullback? You can see on the 28th we had a significant movement to the downside. So if we fail to break that, that would be my key level for the bullish continuation. 4.019% in the 10-year. If we break that, we're continuing. If we come up and make a lower high, I'll then be expecting this to then roll over and go to the downside. And when the yield falls, the inverse to that, money's flowing into bonds. I've had this level marked in for some time. And look, this is all you need to do. This is a monthly chart. You get the magnet tool, and then you just look at the swing lows, the extremes, draw a line, and you'll often see prices pull back to those to and from throughout the days and weeks. You can see it here. Look, TLT broke just a bit lower, 101.78. So if yields continue to rise, come down and then continue, possibly 5.289. So next sort of level there, 4.279. As you can see, this is a swing. Up there, like it goes down and then it swings back. And it goes up and swings back. And you just compare, is that higher or is it lower? And a bearish trend is lower highs, lower lows. Bullish trend is the opposite. This isn't a very good example, but you can see in more recent times. So, high, low, previous low. Pull back, high, low, previous lows. So we're going to get here, still a high, low. Well, then continuing. Time will tell. Now, moving on to the Dow Jones. Actually, the 2-year has, and this is why they say it's inverse, because 2-year yield is offering 4.2% and the 10-year is offering a 3.789. And usually the longer you have your money in the bond, so 10 years, you would expect a higher return because it's a much longer period of time. So when you see the 2-year offering much higher than the 10, something's not right. And it has I think it's 100% strike rate of predicting recessions in the past. So Dow Jones. Now, this is why it's also time to do a video, because you can see here, you draw in Elliott waves. This is an intermediate wave 1 to a 2, and then we're in a 3 here, 4, 5 possible. March of 2020 lows or lower, right? So that's why, and you can see, I think last video we would have been around here somewhere, maybe here, but you can see this candle here, that's all the way bearish. It's like a candle of death, just a skeleton, and then bang, massive move coming out of the gate for August. I started going heavily short at that point. Made a fair amount of profits coming into here. You can see we broke a low, closed lower than here. If you look at the bodies, and on Friday we'll just continued, and you'd expect that with the wave 3 of 3. If we just have an idea of where we're looking, so from 1 to the 2 pullback, you get a Fibonacci extension to see a possible target for wave 3. And look, 22,487. So for interest's sake, let's just draw that in. See if it gets there. That's often what I do. Could be going lower to 15,000, which is 2.618, which is, so from there to there is 0.618 in distance. That's 1. That's 2. That is 1.618 times bigger. So it's 1 plus 0.618. So that's how it works. Let's remove that. So possible 22,500. The Dow Jones for intermediate wave 3. That's in the coming weeks and months. Longer term, shorter term rather. We zoom in. You can see this Dow Jones very bearish. Wave 1 intermediate 2 pullback. Within 1 you have 5 minor waves. And within 5 minor waves you have 5-minute waves. Within 5-minute waves you have 5 minute, etc. And this is wave 3 intermediate, minor wave 3, minute wave 3, so you'd expect a lot of momentum to start kicking in. And so far for the day, you can see not much happening here really. We're flat. There's a bit of a thing I drew the other day. This is if you look at, wedges and triangles and expanding triangle, those sort of things. Like I don't really use it. I mainly use just the swings. You can see here it's worked pretty nicely. This a bigger version of here, so expecting a move lower. We've broken here now. Volatility is currently up to 2.78%. It was up to 4, gapped higher, come back, close that gap, and then continue higher. So you can see the gap was there. That's funny. A tiny little bit of price up there, 33.25. Then it came down. Was that a drawing? No, it's part of the price action. It's odd. Now the S&P, like look at these monthly closes. Bang and bang, just follow through. Not looking good. Bank of England reversed their policy last week. It was interesting. Quantitative tightening to starting to quantitative ease at the same time, which is like the system's so indebted. The longer you prolong it, the more the agony when it eventually comes. Like We've had many, many, many years of prosperity. If you look at this chart, you know, '09, 2009, 600%, 600% compared to '03 to '07, you know. I know it's not the same time period. Let's zoom in and just have a look at that for interest's sake. So '09 to 21, a period of 12 years. So 12 years, about 94 to what, '04, '06. That's 2000, so we need to go back further. What's this? 2000, so 12 years back would be 1986. No, 12 years, sorry, 1988. So there you go. Measure that. Okay, similar gain, 570. It's very interesting. Like 151 bars compared to 155 bars, 605%, 570. And then here we had a pullback of 50%. Here we also had a rally, 103 in 54 months. And then this drop, 57% in what? 17 months. Massive rally again over 12 years. So what would you expect? 50%, 57. You look here, we had a significant drive up from 74 to 87, bit over 12 years. What was that one? 450%, 155 bars. So about the same time period. 87. Look, that was a pretty big move in such a small period of time. Literally in like 2 months. 36%. And that was what happened in COVID times. 35% in literally 2-3 candles. So now, based on 50%, you'd expect out there almost the March 2020 low. If we have a much deeper correction, which I think we're definitely due, that's a crazy gain. So I was born in '86, December. So let's see from that date. If I invested there the next year, it's already up 40%. Wow. So there you go. That's interesting. Almost the year I was born, 1986%, 1984, almost 2000% in 35 years. So, you know, let's see. Some are predicting a much deeper correction here. 80%, 9 below 1,000, but time will tell. We'll remove that, and we'll move on now to the Nasdaq. Excuse me, that's why. So Nasdaq. So all this very similar. Let's get the brush out. Previous swing low, close lower. Previous swing low, close lower. Previous swing low, close much lower. This is the Dow. So that's leading by the look of it. Russell hasn't broken yet. Swing low, break it tonight, I'd say. Especially with that close on a monthly. Long bond. I'm going to remove all these levels now. Actually, I'll remove the high ones. You can see, been waiting for this pullback, hasn't happened yet. We've just continued lower and lower and lower. So I was incorrect. Go for a pullback region. Yeah, you can look at the last 2 months. Look how bearish those candles are. Just fell dramatically out of that channel. And futures, we already looked at this. It's about flat. Currently sitting at 0.382. Next level I'm looking at is 3,200. 3,000 below. Let's look at SPY. So I'm trading on options. So 323.5, 295, say 0.618. So definitely loading up here because wave threes don't come around often. Make some very, very good gains. Closed a truckload of profit last Monday, Tuesday morning, early in the session. Turned out to be good actually, because last week, what was that, 26th, yeah, last week we went up the next day, began down and then finished the week down. So I took profit here, took some more shorts to capture that wave three. Look at crypto, Bitcoin. Bitcoin's not doing much, moving sideways. Failed to make a high here. Ethereum made a lower high. XRP made a higher high. Let's wait and see what happens. Litecoin. Look, if the stock market falls more, I'd expect cryptos. So I'm looking at much lower buys. I'm cashed up, ready to buy, because these will become great buying opportunities when these big moves are over for stocks. It'll be time to load up and wait for the next good runs higher. Anything else? We haven't gone on gold. Now gold's been interesting. Similar to bonds. This, I was looking for a pullback, has not happened yet. Could be over soon and then get a pullback. Don't think it's going to be going up into that region anymore. Probably more like up here, 1807, previous A wave. And that you can have that extended B. This here, probably similar, up around 21. This has made a higher low, which is interesting, whereas gold hasn't made a lower low. Oil's played out to a T. Been waiting for this to drop into this pullback region, and it will get there. 65. It's had a significant move lower the last 1, 2, 3, 4 months. You'd expect some pullbacks around here, possibly up into 90 before continuing. Let's see. US dollar's been on a charge and it's looking like this is a pullback before going higher. If you draw Fibonacci extension, retracement tool, would you say that's one wave there? Let's say so. 382. 5. So dollar's just on a rampage. I'm going to remove these levels. I was looking for a pullback into them. 101, 101,297, but well, that is not currently anywhere on the horizon. This bullish move has just been on a rampage. Probably looking at 120 at this point with this momentum. And remember, dollar rises, equities are selling off. Yields are down currently, but they've been on a rampage. So basically people are selling to get cash because the interest or their, need to cover their losses, margins, or the investment banks, etc. So yeah, anyway, that's it all from me. So look, just expecting these moves lower. We'll have a quick summary actually. So gold, look, if everything sells off, I'm expecting lower in gold, possibly down into 1570 to 1450 region. If we can't break up here above 1686, break up 1734, I'm starting to get interested, especially here for this pullback to happen. Until then, I'm still looking for this bearish movement to continue. Silver needs to break here. $20.50. If it breaks that, then it needs to get up to at least here before even thinking about that. But at this stage, this is the first level I'm watching. Or will we roll over and make a low? Oil, yeah, this is normal. Wouldn't expect this to last too much longer, maybe a day or two sideways, just have a breath. This is going to continue in the 65 and possibly down into $50 a barrel. Dollar, and see here we've had a decent pullback, but this fools a lot of people. Exactly that sort of candle. It's a high test. Wicked up, closed lower than it opened. Bit of price action previously there. Just profit taking as well. Like you buy around here, ride that move up percent or loading up more. That's a big move. 10% move in 8 days. Gosh, it's a currency. And inverse to that, euro. Like, look at that. That's a massive move lower. It's at what, 97. So DXY continues like this. Euro's going back down to 85, 84. Now the pound, this is last week. Big sell off here. Like, look at that in 2 days. Tax on the rich. The rich own a lot of forex, a lot of pounds, a lot of bonds, a lot of gilts. I wonder if like, had enough of this. Let's sell pounds for dollars. I'll float them. Sell bonds. Oh, no tax anymore. Interesting. US yen. Look at that too. 145. It's on a rampage. The dollar against the Mexican peso, Turkish lira. Look at that. It's crazy. Need a log chart. That's a massive move. 1850. The yuan. the Aussie against the US dollar. Aussie's fallen significantly, and if the US continues, this is going in the 60s and possibly 50s. So if you're in Australia, you're traveling or going to US, I'd be buying US dollars. If you live here, doesn't matter. Australian dollars is what you need. It's the price of things that have risen as well. So the US dollar is rising significantly, and pretty much everything's selling off because everyone's going into cash. So looking for these moves to continue. Longer term, looking for pullbacks still in gold and silver. Oil, not yet. Yields, expecting this to stop at some stage, turn around, have a pullback, so money flow into bonds. At that point, I'll be looking to start to buy. It's definitely on the horizon. But for now, just cash and short. So, yeah. Anyway, guys, hope you enjoyed that. Take care and stay safe out there. Some big moves, as I've said. Review your situation if you can't afford significant losses. There's no harm in, you don't have to sell all your portfolio. Just sell a good percentage so you can reinvest lower. Just burn some cash. Anyway, look, it's up to all of us to decide at the end of the day. So I know what I'm doing. And yeah, until next time, take care. Thanks.